Greetings and welcome to the weekly edition of the Safe Crypto Show. I am your host, Tyler Jordan, with co-hosts Mike and Jason. Each episode attempts to cover a range of topics, beginning with a global market cap review and a look at the past week's movers and shakers. Next, a discussion of general crypto news and happenings. Then we consider new and interesting projects and ICOs, all followed by a brief discussion of the weekly tech update by MadeSafe. Let's get started with the show. Safe Crypto Show disclaimer. Please keep in mind at all times that we, the hosts and guests of the Safe Crypto Show, are not offering or giving investment advice. We only state our personal opinions and thoughts on our own interests. By watching, you agree to not hold us responsible for any losses you may incur by executing trades or by maintaining holds based upon the subjects discussed in our episodes. It is Friday, the 9th of May, 2018. Today I'm flying solo, so let's just dig straight in. Our first topic is the top cryptocurrencies this week. As we can see, at the moment, it's very much down. Most of this happened in the last 24 hours. We'll see here, over here in the global charts. You can see down here in the last couple of hours, we've had a huge, massive drop. Looks like it's hit a slowdown point there, but for the week in total, we began at 344 billion, and we are now ending at all the way down to 327 billion, nearly 328 billion. So a significant drop. I'm not sure what's going on in the last short few hours. It's been a pretty significant change. Now, Bitcoin dominance is at 38.4%. Let's just have a look at that. Let's pull that up. Dominance chart, 7 days. Loading data from server. Go. Pretty level, really, the last 7 days. Bit of an uptrend. I think some people tend to leave some of the altcoins for Bitcoin for security, so maybe there's a bit of insecurity about the altcoin markets in general. Let's move on to Blocktivity. Today we have Steem number 1, BitShares number 2, Bitcoin number 3, Ethereum number 4. Ethereum still pegged, 24,000 unconfirmed transactions. I'd say it's averaging up a bit higher over time. Wish they had a chart there that would show how it's faring over time with that. And Ethereum Classic, Golos, Doge, Litecoin, Bitcoin Cash, Zcash, and then Dash. Bitcoin Cash still really low, number 9. Well, yeah, I'm not going to go into that again. Our first news article for this week. We've got a bit of only 4 news bits I'm going to cover. So this week, Alipay's parent company secures $14 billion for blockchain development. I picked this article just because of the 14 billion number. That is pretty huge, and you think EOS is big with what they're doing. They've pulled in. Well, it's hard to say exactly how much they've pulled in, what it's worth now, and what they've got out of it. But you know, some speculate 4 to 5 billion might be the minimum they've gotten. So I mean, 14 billion. Alipay is a big company, big corporation, and yeah, it's going to be interesting to see what they're going to do with that. Alipay's operator, Ant International, has entered into definitive agreements with investors to secure $14 billion in a Series C equity financing round. The money will be spent to pursue blockchain and technological innovation, according to a company announcement today, June the 8th. Recently valued as high as $150 billion, China's Ant International plans to invest the capital in accelerating Alipay's blockchain, artificial intelligence, security, and Internet of Things capability for its global tech platform that targets delivering financial services to unbanked and underbanked consumers and small enterprises globally. The financing round includes an RMB tranche raised from domestic investors, as well as a USD tranche raised from over 9 of Ant International's existing international institutional investors. Major global banks including Deutsche Bank, Citi, China International, Capital Corporation, JP Morgan, and Morgan Stanley acted as financial advisors for the deal. So this is a big deal. There's a lot of big banks involved in this. Yeah, I'm not sure what's going to happen with it. It's not clear, really. They've got a lot of nebulous things there. Their blockchain, their artificial intelligence, security, Internet of Things. But I don't know. Could it be that they're going to build their own kind of EOS sort of clone sort of thing? Something to keep our eyes on, I think. And I'm wondering how many other players are going to come, big corporate players are going to be coming into this space and doing similar things in the not too distant future. Our next article, data shows a switch from hodlers to speculators in Bitcoin in the last 6 months. Data analysis from Chainalysis shows that the amount of Bitcoin owned by long-term investors is now almost equaled by short-term speculators, according to the Financial Times report on June the 8th. Chainalysis is a blockchain research company that analyzes, quote, connections between entities on the Bitcoin blockchain, end quote. Since December of 2017, the amount of Bitcoin held by day traders has risen to 5.1 million Bitcoin, almost equaling the amount held by long-term investors, those who have held the coins for more than a year, which equals about 6 million Bitcoin, in what has been called Bitcoin's, quote, liquidity event, end quote. The Chainalysis data, which was shared with the Financial Times, also shows that Bitcoin trading volumes have now fallen in tandem with the prices, from close to 4 billion daily in December to 1 billion today. Philip Gradwell, the chief economist at Chainalysis, believes this sudden rise in liquidity has been a fundamental driver behind Bitcoin's recent decline in price. In addition to this finding, the data from Chainalysis also shows an imbalance in the wealth distribution of Bitcoin, with a small number of investors, colloquially termed whales, holding a disproportionate amount of the cryptocurrency. Of the roughly 17 million Bitcoin available, the data shows that as of April 2018, around 1,600 Bitcoin wallets hold at least 1,000 Bitcoins each, totaling almost 5 million Bitcoin and accounting for almost a third of all Bitcoin in circulation. I wonder how much of that is actually in the day traders pool as well. That would be an interesting graph to see. The data from Chainalysis raises questions concerning manipulation of crypto markets by a small number of investors. While institutions have begun carving out a share of the market, many believe that the future of Bitcoin will depend on which approach regulators take. I'm not bullish on Bitcoin at all. I think platforms like Ethereum, EOS, and in the future MadeSafe Safe Network are going to become the big players, and Bitcoin is going to drop and drop and drop, relatively speaking. Alright, our next article here is, to the top, Korea's unique ability to make its reverse ICO fad permanent. This is an expert take article on Cointelegraph. I find this really interesting. I'm going to zip down because they're talking about this reverse ICO. So the first question is, what is a reverse ICO? I'm just going to skip around in this article a bit. So I'm going to start with this bit on what a reverse IPO is. The reverse IPO, which is the abbreviation of Reverse Initial Public Offering, inspired the reverse ICO. A reverse IPO, also called a reverse takeover, is the name given to the process that takes a private company public through the acquisition of a public company. After acquiring the publicly owned entity, the owners of the private company then exchange their equity in the private company for ownership in the public company. So it's not too complicated, really. You got a private company, you want to take it public, you form a public company, and you take that public company, it offers its shares, and then your private company basically sells its ownership to the public company in exchange for shares. Mergers and reverse mergers are increasingly popular alternatives for promoters looking for an attractive exit. So that's sometimes, the people involved in the company think, well, this is a way for me to sell out and, give my ownership over to this other group and let the company keep running as it is without me having to, sit on that equity. I can now take that equity out and go sip margaritas on the beach. Globally, the number of initial public offerings is on decline. There is no exception to this downward trend in South Korea. The recent withdrawal of the SK Lubricants initial public offering by SK, one of South Korea's largest conglomerates, provides one more data point that indicates market conditions for the initial public offering in Korea continue to be undesirable. I'm not going to read all that. I'm going to jump down to this next part. The reverse ICO. The reverse ICO is most broadly defined as the process of buying out the equity of an established company with cryptocurrency acquired through a token sale. So as you can see, that's very similar to the reverse IPO, which is how it got its name, the reverse ICO. Neither the acquired company or the token sale need to be public. This means that a private company may also be acquired through a private token sale via the reverse ICO mechanism. So that's an additional thing that can be done with the ICO that you can't do with the IPO, because the P in IPO stands for public. That's what they are. That's what the regulations require. But with an ICO, you can add a private layer onto that too. You can make it a public, or you can remain private. Typically, to incentivize growth and platform adoption, some portion of the tokens are offered to the general public. It all depends on the promoter, securities regulations, and the strategic motivations behind fundraising. So usually, if this ICO, reverse ICO, is a private mechanism, then that would be like seeking additional VC capital or something like that. Where you're getting a large private equity stake brought into the company. Generally, and for comparison's sake, in the reverse merger, promoters offer the general public the opportunity to become shareholders for the first time. In the reverse ICO, promoters offer the general public the opportunity to become token holders for the first time. Tokens represent equity, and in such cases, these equity tokens represent voting rights and the rights to future dividends of the venture. Traditionally, ventures limited such economic benefits to those stakeholders that financially invested in the company and employees with stock options. With the advent of equity tokens, companies may also easily accrue benefits to the initial customers and suppliers that contribute to the future success of the venture. Tokens provide a frictionless way to incentivize all stakeholders. Equity tokens may be issued to both early adopters and vested suppliers that have a stake in the company's financial success without the hassle of implementing a share registry and tediously tracking stock ownership. Economically, South Korea gained notoriety as one of the four Asian tigers. In contrast to Hong Kong and Singapore, which evolved into financial centers, South Korea went the industrial route. South Korea's success in transforming their economy from a poor agricultural economy to the 11th largest economy in the world influenced aspiring industrial engineers in agricultural nations around the globe. Nowadays, industrialized Korea has provided fewer financial growth opportunities to the general public. This has caused a frenzy in cryptocurrency speculation. Moreover, in spite of Korea's initial negative stance on cryptocurrencies and ICOs, industry leaders, prominent government officials, and outspoken professors from top universities want blockchain technologies and new ICO funding mechanisms to succeed in Korea. Consequently, there is growing sentiment that Korea can now leverage financial technology to grow from its industrial roots. Many people hope that Korea will, on a national level, seize on the economic efficiencies introduced by tokens and cryptocurrency engineering to once again evolve. Certainly, change is happening. However, unlike the top-down industrial revolution that took place at the end of the last century, the cryptocurrency revolution is bottom-up. Psychologically, Korea is a binary society. That means that once something becomes popular, the entire population tends to adopt it. A clear example of this is smartphone penetration. It took a while for Apple's iPhone to enter the Korean market. However, once introduced, smartphone adoption rapidly eclipsed smartphone adoption in the United States. There are other examples of this 0 or 1 society outside of the technological sphere, but technology adoption is more easily measured. In the Republic of Korea, cryptocurrency ownership is already at 30% of the population and climbing. This rapid organic growth provides a strong base of cryptocurrency-savvy investors, and this solid youthful foundation is necessary for reverse ICOs to flourish. Given that modern Korea tends to be a binary society and that reverse ICOs are putting more tokens into the hands of its native businesses, the Republic truly has a shot at evolving into the world's first cryptocurrency nation. I just find this really fascinating because this is an open door for smaller businesses, smaller private companies to get involved in cryptocurrency and to start selling tokens. And these are companies, established companies that have real assets, real brands, real products that will most likely be coming into the ground floor into the cryptocurrency arena over the coming 5 years or so. And beyond, 5 to 10 years. So, yeah, this is incredibly bullish, more bullish news in my view, and I I didn't know that this was really a thing until I read this. I mean, I speculated on it, and this really excites me along with airdrops. Now, airdrops haven't been a big thing up until EOS, and EOS is, we got an article on EOS next, but basically because EOS offers is a blockchain, is a system that doesn't have any transaction fees, then you can do airdrops without incurring any major fee. On Ethereum, if you were to try to do an airdrop, you'd have to pay gas, and airdropping, you'd want to be somehow specific to a subset, because if you tried to airdrop to all Ethereum users, you'd be paying a huge amount of gas. It'd be a big cost to you. But on EOS, you're not going to have that cost. So I think airdrops are going to become a really major way to bypass security laws, because if you're airdropping, you're giving tokens away, you're not selling them. And if you're not selling tokens, then securities laws don't really apply, at least yet, unless they're going to change the laws. So if you could imagine a combination of an airdrop with a reverse ICO, what we have here is kind of a recipe for the traditional private businesses around the world to raise capital without much regulation at all on the global market. I mean, I can't imagine anything more bullish than that. That's going to be an incredible shift, and we'll see what happens. Our final article, the 5th largest cryptocurrency EOS blockchain is set to launch. The EOS blockchain is set to launch today, June 9th, according to the results of a live stream vote that took place yesterday, June 8th. Candidates to become the EOS blockchain's so-called block producers, the equivalent of miners on the Bitcoin blockchain, voted go in their latest voting session to make the EOS mainnet go live at 1 p.m. UTC today. The community has yet to confirm that a successful launch has taken place as of press time. The news comes a week after EOS creator, blockchain software developer Block One, released version 1 of the blockchain protocol, EOS IO, to the public. The software is designed to let enterprise-level and community-driven businesses build scalable blockchain-based applications. EOS IO, which commentators expect to compete directly with Ethereum as a protocol for building decentralized applications, also received a new boost of funding last week. The same day Block One released EOS IO 1.0 to the public, the company announced the launch of a $50 million fund to support the development of the EOS IO ecosystem in partnership with London-based blockchain investor SVK Crypto. Now, they've already invested, I think, over $300 million in combination with another VC group to fund development. So they're going to continue to pump money into these cooperative ventures, I reckon, to fund development of decentralized applications on EOS. On June 1st, Cointelegraph reported that EOS had completed its year-long token sale, raising a record-breaking $4 billion to become the largest initial coin offering in history. EOS is currently the 5th largest cryptocurrency by market capitalization, with a market cap of $12.8 billion. The coin has seen just over 3% growth over the past 24 hours as of press time. Well, it's actually down now, but it was up to $14.37 US when this was written a few hours ago. So, yes, EOS is going to be a pretty big game changer for crypto, and I look forward to seeing what's going to happen there. I do hold EOS as a disclosure, as well as SafeCoin, MadeSafeCoin. Which brings us to our last topic, the MadeSafe development update, which we do every week here on the Safe Crypto Show. So here are the highlights. If you missed it, the biggest piece this month was definitely the TechCrunch article last Saturday on Parsec. It was a great in-depth piece following up on the launch of Parsec a couple of weeks ago, and definitely one to read and share if you haven't already. I will include links to these articles in the show notes today as well. So this week we were able to build a new Peruse package, which contains, now Peruse is their browser, their new browser, which contains all the enhancements and refactored code we've been working on to improve performance and stability. We started our internal testing phase on it, and we are working on fixing the minor issues we encountered to be able to then share it with the community. The release of Safe App 0.7.0, Safe Authenticator 0.7.0, Safe Core 0.30, and FFI Utils 0.6.0 should become available soon with all features that have been added since these crates were published in February this year. The major change from the previous version is the licensing change from dual GPL version 3 commercial to MIT BSD for Safe App and GPL 3 for other client libraries. We've also implemented the bindings generator framework for safe client libraries with C headers, Java, and C# as our main targets. Last, half the routing team is working on implementing Parsec. The tasks for Milestone 1 consensus in a static section have been specified in Jira, and the implementation is going smoothly in a new Parsec GitHub repo. So as you might have been able to tell, the last couple of points there were pretty technical. So it's been a pretty... they're pretty much getting down to the code now this last week and starting to dig back in after having really a lot of activity, marketing activity the last few weeks with Parsec. So I'm not going to get into the details. The link to the update will be in the show notes, but please do have a look. There's a lot of interesting information in the update every week, especially if you're a developer or you're interested in the marketing or what's going on there with MadeSafe. Please get involved and learn more. It is such an incredible community over there. I just love it. The people are really, really hardcore. They're really motivated to see a fully autonomous, anonymous, decentralized internet be a real thing, and they're not going to stop until it's done, and they've got the funding to complete it. So please check it out. It's going to become bigger than EOS in the end. I really believe that. So have a look, and that is all we have for today, folks. I'd like to thank you for joining the show. I hope you found the episode informative and helpful. Please subscribe, like, comment, and share it with others, and tune in next week for another interesting episode.